Hello, I'm Kevin Flynn, and welcome to another edition of Avalon's Market Minute. It's April 7th, 2013. Markets eased off a bit last week in the face of some disappointing economic news. First and foremost, of course, was the jobs report, which was far short of expectations. The latest national survey of purchasing managers were not bad, but they weren't as good as hoped for either. 2010, 2011, and 2012 all saw spring slumps, and so the worry is that 2013 might see one as well, and it probably will. Some of the data that I track has suggested all along that the economy isn't really moving as much as some of the headlines have suggested. Job growth has been slower this quarter than the first quarter of 2012. Business investment has tapered off, despite a January rebound after we passed the edge of the fiscal cliff. Europe is still in the ditch, and global trade is slowing. The seasonal adjustment factors that flattered the headline data in the first quarter are now turning negative. However, keep in mind it's still April. Historically, it's the best month of the year for the stock market. Trading programs and day traders will keep buying dips unless something really bad happens. Something a lot worse than the jobs report, which saw prices rebound all day long, almost from the moment the market opened. There are still a few legs left to stand on, or to pitch, over the next couple of weeks. One is the Fed. A week ago, there was talk of the Fed beginning to wind down quantitative easing. Now the fact that it doesn't have to change anything can be something for the markets to rally on. The FOMC minutes from the last meeting come out on Wednesday, and even if they don't provide something positive, which they might not do given that the February jobs report was all right, Fed officials can always come out afterwards and say, "Kidding, we're still going to keep pumping up the market," and that's rally food. Then there's retail sales for March, which come out next Friday. Easter is one of the three big shopping events of the year, along with Christmas and back to school, and it came on the last day of March. So monthly sales should be decently positive, although the estimates are supposed to be for zero. It's kind of rigged, isn't it? But it's another upside surprise. First quarter earnings start next week. They're not really going to be very good, but estimates have been slashed to the bone to the point that they're actually supposed to be negative overall for the first quarter. That isn't what the street really expects, of course, but that way we can get a steady stream of earnings beats, so-called, for a few weeks. I'd watch out for the end of earnings season, though. And let's not forget 1600 on the S&P 500. A nice round number is always an inviting target for traders. It might have to wait until the fall, but there's still a chance we get there this month. So long as nothing too bad happens in Europe or North Korea or the Middle East, traders will want to collect on the rally that they're entitled to. After all, it's April. I'm Kevin Flynn, and thank you for listening to Avalon's Market Minute.